Welcome to Investor in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. This week, we're doing something unique with the podcast, and then I'm offering a series of interview previews for interviews that will take place in the DIY Investing Summit next week, which begins Monday, January 23rd. And the summit is being put on in partnership between Seeking Alpha and Investor in the Family, and each one of these interview previews stands alone in its value, but it gives you a glimpse of what the rest of the interview may be like, as well as the rest of the summit, which overall has 25 interviews from some of the top investors from Seeking Alpha. Registration for the summit is free for a limited time, so be sure and check it out at DIYinvestingsummit.com. That's DIYinvestingsummit.com, or you can check out any of the links in the show notes or the article. I hope you enjoy this interview excerpt with Damon Verial. What would you say was your biggest mistake of 2016, and what did you learn from that experience?
Well, my biggest mistake was probably trading with too little capital in a certain account. So I have a more risk-heavy account in E-Trade. And what happened there was I got flagged as a pattern day trader. So maybe a lot of younger traders don't know this, but if you make more than 3 day trades per week, you get flagged by your brokerage. And they tell the SEC that this person is essentially a pattern day trader. And that restricts your account unless you bring the account back up to $25,000. So what happened with E-Trade, it really made me upset because essentially I made 3. I was doing very well just using this trade as a vehicle for a trading strategy I developed on a 3 times ETF called the NUGT, which tracks the gold miners ETF. And I was doing quite well with this, but after the 3rd trade, I was left with some options in the short position. And E-Trade called me and they said, hey, look, we're going to have to close these positions for you. And I said, if you close them, that's going to be the 4th day trade per week, and that's going to flag me as a pattern day trader. That's going to freeze my account. And they said, we have to do it anyway.
Oh,
so
no way.
They did it, and my account was flagged as a pattern day trader. And then I couldn't trade through that anymore without putting in an extra 15K to bring it up to the limitations. So that made me upset because I just wanted something to experiment with. Logic doesn't work with a lot of these brokerages. So I would say,
or maybe not logic, but they're looking out for themselves first is probably another way to think of it.
Yeah, that's what they said essentially. And they also said they don't care about the other trades because in fact, I had other options that protected those short options so that I couldn't lose over the amount that was in my account, but they needed that anyway to be closed because of their own margin conditions. So those margin conditions were illogical and they agreed with me, but they still had to close it.
Really?
Based on their own rules. Yeah. So I would say if you're a young person with not a lot of capital trying to start out trading or day trading, you'd better look into your brokerage very carefully and get them to understand what you want to do before you just open an account.
So what would you have done differently? Would you just have made sure that account was funded past the 25K, or maybe use a different brokerage? Or
I would have used a different brokerage because now I'm using one that's called Tradier. Right. And they are a lot smaller, and you can actually contact them through email a lot easier. Because what happens with E-Trade is you get calls from like the Philippines or India. So you're not really talking to, the options experts unless you're calling them during the actual trading hours. So, it's all outsourced. There's no real human element there. And through Tradier, they will kind of waive certain rules because they know what you want to do and they know who you are.
How did those trades with NUGT in that account, were the trades working out well? Like, were you pleased with how it was happening, or is that purely just an experimental training ground for you?
Well, I noticed a trend in this 3 times ETF, so I decided I'm just going to trade with this account that was sitting there with 3K anyway. So I brought that 3K up to 10K in, I think it was 1 or 2 weeks. So I essentially tripled the account. So it was working out well. But it stopped for that reason and because the NUGT had a split. So it wasn't trading at I think at that time it was trading like at the $50 range, but now it's trading at like the $5 range. So you'd have to buy so many options to get the same results, and it's just not worth it these days.
No, that makes sense. But 3K to 10K, that's pretty good in 2 weeks. Congratulations on that.
Thank you.
Well, let's talk about your biggest victory of 2016 and what helped set you up for that success.
Well, I'd say that was it, because I think a lot of these patterns that we see are, you can say they're self-fulfilling prophecies, because you got to realize that half of the trading that's going on in the market these days is from algorithms. It's from quants. So half of it's technical. Now, a lot of investors like to look at the company from a fundamental perspective and think, everybody's going to see this new product come out and it's going to change. It's going to be like some sort of disruptive technology. So we should buy this company. But a lot of the movement in the markets, especially short-term movement, is because of algorithms trying to identify patterns. So if you do see a pattern and it looks like a pattern and you do the back tests, if you run the numbers and you find it really is a pattern that seems to hold for a certain period of time, you got to realize that other algorithms see that pattern too, and they want to play that pattern too. So even if the pattern doesn't have a fundamental basis, the fact that it's there means that it's probably going to be solid for a while. And that's what I think happened with the Nugget. Because if you look at these three times ETFs, so these are funds that are essentially leveraged times 3. So let's say the Nugget is a 3 times ETF of GDX. GDX is the gold miners ETF. So what happens is if the gold miners ETF goes up 1%, then the Nugget has to go up 3%. That's the rule. Now, I was looking into this ETF, this 3 times ETF pattern, and what I saw was that most of the 3 times ETFs, they have a little ramp at the end of the day where there's a buying surge that goes on in both the underlying ETF like GDX and the leveraged ETF like Nugget. And that happens at the last hour of the market. Now, fundamentally, this makes sense because if you understand how these leveraged ETFs work, the company itself doesn't actually hold the stock. It doesn't hold the underlying ETF. It doesn't hold GDX. Instead, it makes a deal with someone else who promises to, at the end of every day, give the company, which you own a part of, give the company 3% of, 3 times the movement of the underlying ETF. Now, for them to hedge themselves, they have to buy that underlying ETF at the end of the day, or else they have a lot of risk on their side. So that's the fundamentals. There's got to be, at the end of the day, a lot of buying or a lot of selling of that underlying ETF so that the partner of the 3 times ETF can hedge its bets. Okay, that's what I was...
I'll make sure I got that down. So basically, in this case, Nugget doesn't actually own GDX, but at the end of the day, it sounds like they do purchase it and then what's going on exactly at the end of the day?
What happens is Nugget makes a deal with another company.
Not necessarily GDX, just some other holding company.
Correct.
Okay.
And this other company promises to give Nugget 3 times the gains or losses of GDX at the end of every day.
Okay.
Now that company, of course, has to hedge its bets. So what they do is they buy GDX. They deal with buying the underlying ETF. And because it happens at the end of the day, that's when that buying or selling goes on.
Interesting.
So that's what I was looking into. And after looking into that and testing some patterns, I found a pattern that worked and I started trading it. And I don't think I had even one loss in that first week. And that first week I tripled my account through options.
This one specific account, not necessarily this was like your smaller experimental account?
This was the little tiny $3,000 account.
So if that's true with Nugget, obviously that's assuming that would be true with almost any other highly leveraged 2X or 3X ETF. Have you taken that and applied it elsewhere and seen success?
I looked at the other ones. The problem is there's not a lot of liquidity in the other 3 times leveraged ETFs.
Oh yeah, that makes sense. Even on the major indexes, like the ones on the ones on the Russell or SPY and stuff like that.
No, Russell has very, very little liquidity. The SPY, which 3 times ETF are you talking about?
Yeah, honestly, I don't know. I assume there would be one, but I honestly haven't checked recently. So maybe there isn't.
The thing is, most day traders on the SPY, they just outright buy the SPY. Sure. So it doesn't work so well with that one. But NUGT is the most liquid 3 times ETF, even today.
That makes sense. Because I mean, GDX probably has to be one of the among the most highly traded ETFs too, I would assume.
Yeah, so GDX is very liquid as well.
Yeah, okay.
But it seems like everybody who's playing big money for day trading, at least, is playing the NUGT instead of GDX. But when it comes to, just the S&P 500, people prefer the SPY instead of, SDS or something like that.
That makes sense. Cool. So I guess that identifying that was helpful, but it's not at this point. It's not something you see that is reproducible in other scenarios. But the theme, obviously, of looking for those patterns is something that you'll continue doing.
Yeah, and this is a pretty good lesson to look at how the underlying works, because I wouldn't have came up with this idea without knowing that NUGT doesn't actually buy GDX. They have a deal with another company. And sometimes you'll see a pattern yourself and you'll wonder if it's really a pattern. And if you go and look at the fundamentals for why that might be a real pattern and find out there's actually a reason that supports it, then you'll be a lot more confident in experimenting with that. And it might turn out to be something really successful.
What made you look into this one? Were you just reading something and then in an article and they mentioned that the ETF worked that way and you thought, hey, this is an opportunity? Or do you have a process you go through where you're kind of combing data, looking for patterns and opportunities?
Well, I do a little of both, but for this one specifically, I was curious as to how the 3 times leveraged ETFs work. Because if you look at, I was looking for an arbitrage opportunity at the beginning, actually, because you'll see that, for example, the NUGT isn't always exactly 3 times.
Right.
Right. So
it's like the Contango situation.
Right. So I was thinking maybe, if I sell 3 options on the GDX and then buy 1 option on the NUGT, maybe I can get an arbitrage opportunity. And I wanted to make sure that the fundamentals made sense for that type of trade. But then when I looked at how the NUGT works, I realized there's another opportunity for a trade here.
I hope you enjoyed this excerpt from the DIY Investing Summit. If you want to hear the rest of the interview and the other 24 interviews from the summit, be sure and visit DIYinvestingsummit.com. That's DIYinvestingsummit.com, or you can click any of the links in the article or show notes to this episode, and it'll take you straight to the registration page. And remember, the summit begins Monday, January 23rd. You can still register after that, but you'll miss some of the content. So register by Monday, January 23rd at DIYinvestingsummit.com, and I'll see you there. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.